Welcome to the How to Raise Money podcast for anyone who wants to raise other people's money for a business or property venture. Right now, there has never been more money on the planet, and there has never been more opportunity. This podcast will help you put the two together. So, if you need money for your business or property proposals from banks, lenders, angels, whales or dragons, this is the podcast for you.
Hi everyone, welcome to another edition of the How to Raise Money podcast with me, Ray McLennan.
And it's with me, Nigel T-Best. Raymondo, how the devil are you, sir?
Well, I've been pretty static recently. You've been traveling around though a lot, and here, there and everywhere.
Yeah, trying to get a few things. I've got sort of 3 irons in the fire, as it were. But the most important travel recently was to play your favourite game, Ray. Went up and played the old course at St Andrews. Always a delight and pleasure to visit that part of the world and have a game.
Mm-hmm. A good walk spoiled. Yep.
Well, yes, it was made eminently more agreeable with a few claret jugs of claret, surprisingly enough. So that was great fun doing that, and very privileged positions. They're playing a big tournament there this week, and we had the Ryder Cup. You'll have been glued to your telly. I mean, not wishing to date this podcast, but it was the Ryder Cup. If we narrow it down to a European victory, you know, that narrows this podcast that could have been recorded any time in about the last 30 years. But no, a good stuff. It was good stuff. But so things happening. We will go into a lot more detail. Folks, at the moment, we don't like to tempt fate and all the rest of it, so we won't go into detail on anything at the moment. But
Indeed. I like results-based. So there's a few things that we get some results through, then we will pass on the knowledge and the information, especially when it comes to, raising money and all that kind of carry on, because there's some interesting developments happening. October's always an interesting month, I feel. And I did make the sort of the comment earlier on of, it's October. I wonder what day they're planning the stock market crash. And, all the indices and all that kind of carry on. And I read that the guy who predicted the 2008 financial crash, a guy called Michael Burry, he was played by Christian Bale in the film The Big Short, and he has put a chunk of money against another financial disaster. So what is Michael Bale saying? Michael Burry, not Christian, Michael Bale. Michael Burry, played by Christian Bale.
We know who you mean. We know who you mean.
Saying? Well, he is saying he's betting on an event happening, and he's bet $1.6 billion US. And the Securities and Exchange Commission in America have shown that he's taken negative options on the S&P 500 and the NASDAQ 100, both are which are representative of the US economy at large. But interestingly, he's using more than 90% of his portfolio to bet on this particular downturn. So other people are going to be looking at that. I mean, is this going to be one of those self-inflicted things? The government have correctly predicted 3 of the last 10 recessions, that way, where you talk yourself into a recession almost. Is that what we're looking at here, Nigel, do you think?
Self-fulfilling prophecies. Ray, probably so. Here's my angle on that. All the businesses at the moment over the inflation and interest rates debacle and manipulation have absolutely trousered it. I think what we will suddenly see is a raft of declarations of the fact that profits are going to be harder to come by. The market's going to severely correct them. They will have, lo and behold, probably sold out of their positions anyway already. So not only will they have made the profits there, but they'll also be making it on the potential future share values. I think there'll be a big correction as people say, whatever we made this time around is not going to happen in the next year or two. It's going to be tougher, etc., etc. They'll use the word crisis a remarkable number of times. A cost of living will be thrown in there and numerous times, correcting adjustments, all the rest of it. And effectively, it'll be just clever accounting entries to do things like the banks did during COVID, where they lent all the money, then said, we don't think anyone's going to repay it, so we'll write it all off as bad debt, and then we don't have to pay corporation tax. And then lo and behold, they had a review and said, oh, actually, people are repaying this. We'll release it back into profits. And there we go. So, folks, what does it mean for thee and me? Well, you know, they always say cash is king, don't they?
Mm-hmm.
And just one deal that I've done recently enabled me to, because it was effectively cash. I'll go into this in a greater detail another episode, but it was a connected loan from my pension to my company, and the company had the cash to purchase property. The property has issues, but the issues are frightening to many, but less so to people who kind of take a more objective rather than subjective approach to things. You look at it, you go cash, purchase, great price, you know, great for the vendor who was worried that the problems were going to be too big, and she was going to, you know, it's going to be a problem, drag on. No one else could get it. Banks weren't interested. They were nervous. Insurance companies said you can't insure it. Various things like that. We stepped in with cash, and you could do it.
Mm-hmm.
What we've got is a little house, and 2 doors down used to be a post office version of it with a bit at the back. And we were talking to a neighbor, and that post office is now 3 flats, and they are taking 2024. If it was based on our house, the rents would be 20% of the value of the house. So 20% return on the rental income.
Not bad at all.
Yeah. So when people say you can't do it, maybe now is where cash is king. And, you know, with the interest rates and the borrowings, maybe it's time to, if you've got investments elsewhere, Ray's saying, hey, look, if you haven't watched The Big Short, watch it. That character, I'm sure, is embellished by Christian Bale.
Mm-hmm.
But the film is worth another watch. The Big Short, worth another watch. And the crucial bit that they miss out on, which is the packaging of the mortgages, we will come back to again in another podcast episode, because that is the bit that to me is the flashing red light, klaxon going off. That is the key bit that nobody has delved into as yet. But yeah, watch that film. If that guy who he analyzed in the film, okay, these bonds that were made up of mortgages, people just looked at the bond as a whole, didn't they, Ray, as a package, and gave it a rating. He went in to every mortgage that was in that particular bond, and sometimes there were thousands of them, and he analyzed the person and the repayment history to look at whether people were repaying on these mortgages. And when he found that loads of people were defaulting, he was then saying, well, if that proportion of people are defaulting, and this is rated at AAA, it only takes a couple more people before this is actually worthless. Never mind triple B or whatever. And he went to that level. He went to that nth degree. So, Ray, I love it. The fact that you found this, and he's saying, hey, folks, I've done some analysis, because if he's anything like his film character, that analysis will be enormous, super in-depth, mega analysis. And yeah, if he's selling up his positions, it might be a time to just have cash under your mattress, because obviously in a bank is not safe.
Yeah. So the how to raise money tip for this month is raise money on the stock market by shorting it.
Yeah, well, it could be.
Sorry, I am reading, and I'm almost there. It's a book called Shredded, and it's about the Royal Bank.
Read the Shred by any chance?
Read the Shred. Yep. It's called Shredded by a guy called Ian Fraser, who's an economics writer for Financial Times and the Scotland on Sunday and the Sunday Herald and all the rest of it. He's been around for a long, long time, and was quite quite embedded in all of this as it was happening, and obviously kept loads of notes at the time. So the book is very detailed about who said what and when it was said and all this kind of and about how they knew that they had all these subprime mortgages, even though they were saying they didn't have them. They knew they had them because they had purchased into some banks in the United States. They bought ABN AMRO, which was a terrible, terrible deal. They way overpaid for that. And so when you look at the analysis that they had then, they had all the analyses, but what they did was decided to ignore them. And which is what caused the problem, is ignoring them, because others didn't ignore them. Quite a lot of banks pulled out, and the Royal Bank just kept on buying. Royal Bank and HBOS just kept on buying.
Right, in that film, The Big Short, I think the most telling thing is right at the end, the character played by Steve Carell, who said it wasn't that they didn't know what was going on, it was that they didn't care, because they knew they were too big to fail and that the government would bail them out. Incredible story, incredible sort of film to do. And it was just something that, I just thought was cool.
Well, it's interesting in reading that part. At the time, the Americans were not going to they were not going to bail out the banks in America. It was really Gordon Brown and Alistair Darling that made the decision. And they had to try and keep that under wraps before they could let the banks know, because they didn't want the markets to find out. And Robert Peston, who's a BBC economics journalist, seemed to be a bit of a thorn in their side at the time, trying to expose everything before they had anything ready. So whilst we know now that the banks bailed them out, they did not know at the time that they were going to be bailed out. They were panicking. And what Gordon Brown and Alistair Darling felt was that if the ATM machine stopped working, if people couldn't go to Tesco and buy their food because their cards wouldn't work and all the rest of it, it was only a matter of time before they would be throwing bricks through windows and taking the stuff. And they actually had contingency plans in for the army on the streets and all the rest of it. And then the bank came to them and effectively said, we've got 24 hours and we'll run out of money and we won't be able to service anything. So we need something now. But Alistair Darling and Gordon Brown had been working on it for a matter of weeks. And then it was sort of when they came literally with the begging bowl. So the government had a number of conditions and said, okay, well, we will help you subject to the following conditions. And of course, these conditions meant that Fred had to go and there were no bankers' bonuses to be paid, et cetera, et cetera, et cetera. So very interesting book, Shredded, about the Bank of Scotland. And the interesting thing, too big to jail, is rather than too big to fail. Well, there was only one, I think.
So Ray, sorry, I'm just holding up here, folks, because I was reading something very similar to this, which is Too Big to Jail, which is about HSBC and how the rise of HSBC came about and how it was involved in money laundering to an epic scale.
Yep.
The funding of the Mexican cartels and all the rest of it, and how the banks positioned themselves whereby they effectively couldn't be sanctioned or jailed or anything happen because they just turn around and say, well, essentially, we'll pull the rug from under everything. People won't understand what's gone on with all these financial things. They'll just know that there's no money around, and then it'll be, a huge issue. So the governments have to step in, which is this phrase that Steve Carell says in The Big Short. They went hell for leather for this. They knew that it was all going to go to hell in a handbag, and all the rest of it, because they knew that they could then turn to the government and say, well, if you don't bail us out, you're going to have a hell of a mess on your hands. And so they kind of token let some go, and then the rest they did the deals. But it's
interestingly, the rules have changed now. There are no more, apparently, allegedly, there are going to be no more bank bailouts. There's going to be a bail-in, which they tested in Cyprus, where they basically will take money from people's accounts and give them shares in return, possibly 20%. So if you've got more than £85,000 in the bank, and in a bank, so if you've got your money in various different accounts, but it's all with the same bank, the maximum you'll get is 85,000 covered by the government guarantee. Otherwise, you're going, there's a risk. You could be part of the bail-in. So what does one do about that? Well, that's an interesting conundrum. And I have been speaking to one or two people about that. It seems that the National Savings Bank has an upper limit of 1 million. So if you are sitting with more than 85,000 in various banks and you're looking to get some more security on it, I would move it to National Savings. The National Savings Bank, where you'll get £1 million. So that should save
right. How about
a bit of money there?
Yeah. I mean, that's good stuff. But how about this? People say, oh, house prices might come down. If you have 200,000 in the bank, or you could have a £200,000 house, how much has that house got to fall before it's down to the 85,000 guaranteed amount if you left the money in the bank? It's got to fall, 50-60% in value. Well, when did houses last do that? Unless they suddenly find some sort of contamination that means you can't go near it for 12,000 years.
Well, even in
it's
2008,
not going to happen.
They never fell by much more than 20% in some places. And,
No,
and
so
I think it was on average 12 or something across the board.
So if you're sat with cash, or here's the thing, if you know of investors who are sitting with banks full of their money, and don't forget, folks, it's related banks, isn't it? So it's got to be completely different institutions. You can't have 5 accounts at sort of what is it, NatWest, TSB, Lloyd's, or whoever's owned by the same thing. You've got to make sure that they're not all lumped under that single 85,000. So if you're talking to investors, go talk to them about the fact that, if something does happen again, what the hell is going to happen to your money? And if it was sat in a property, even a 10%, 20% drop in the value of the property is nothing compared to going from $500,000 in cash to 85,000 payout. So it might just be a conversation. Is it scaremongering? Well, it's making someone aware of the facts. And then they may sort of go, crikey, and I'm still only getting 3% from the banks on savings rates. You can offer me 8, 9, 10% or whatever. This is sounding more and more like I'm mitigating my risk rather than keeping it in the bank, which I thought was risk-free, but clearly isn't. And maybe now's the time to do it. And, I think that's conversations that anyone going out there looking to raise money should definitely be having with their investors. And even your family and friends. How many people, sadly, when it comes to probate for family members, realize then that they were sat on, silly amounts of money that were earning nothing.
Indeed.
And we're a real waste. So have those conversations, folks, and then tell them to sell everything in the stock market. Then tell them to get a large mattress, place it underneath the large mattress, and then put your head between your legs and kiss your
world goodbye. Indeed.
Yeah.
All right. We have to kiss this goodbye. So this week's episode, How to Raise Money, has been on can you raise money through the stock market? Take a look at it. Because October, I think it's something like 10 or 12 out of the last 17 stock market crashes, which is defined as over a certain percentage, have happened in October. I mean, the famous one, 1929, was in October. Black Monday, back recently was October as well. So they'll talk themselves into it. You'll see a lot of that over the coming times, as Nigel said. Crises, panic, all those words will be used because that's what newspapers sell, and the TV news sells fear. It has to sell fear. You've got to make you afraid. And then you'll do as you're told. All right. Well, on that bombshell, I've been Ray McLennan.
I'm still Nigel T. Best, and we'll see you again soon, folks.
Bye-bye.
Cheers.
Thank you for listening to the How to Raise Money podcast. It's made for people who want to raise money as debt or investment equity for their business or property proposal or empire. The website has all the useful links and underlying research, and you can get downloads of the checklists and other useful information. See you next time, where we can show you how to raise money. There is abundance. There is money enough for everyone on the planet. The question is, who has yours?